I guess the way that I explain what I do is I find really interesting companies that either don't exist or should exist. Basically the same strategy across energy, life sciences, compute, all things critical technology. It's always about what are the most critical supply chains, who's doing what in them, where are there actual structural demand and supply side shortages. And I think for us, that's kind of the core of how can we find a monopoly or oligopoly or player that is so critical to a supply chain that without them, you don't have the thing that you need to make.
Hi, I'm Tom Guinness and welcome to the Raising Europe podcast. Here we go behind the scenes with the people building the future of European tech.
Today we welcome Lina Gaydarova to the show. Lina is an investor at Novaterra, an early stage fund based in Milan that invests in critical technologies in Europe and abroad.
You don't want to miss this.
So my name is Lina Gaydarova. I am a venture investor. And I guess the way that I explain what I do is I find really interesting companies that either don't exist or should exist. And I help them become a company and hopefully take over the market. I think it's important because I typically spend time in areas I consider highly critical industries. And I think there's something really fun and interesting about working with people to make an idea into a reality and eventually a business.
Right. And so how did you become a venture investor? Tell us a little bit about your story and your journey to date.
Yeah, very strange journey. I didn't even know what venture was. My background's, it was not very financy for a while. So I'm originally from Bulgaria. I grew up in California. I studied math in uni. I really had no idea what I wanted to do with my life. I was just I want to get a job and maybe make money. And of course that launched me into investment banking, where I did a fair amount of deal sourcing, some execution across the most probably boring industries you could imagine. I did a lot in waste management, refrigeration, heating, cooling, which is now having a renaissance for some reason. But yeah, so did a lot of that, and then was quickly a little bit bored, pivoted into private equity and investing, and did a lot more of the really fun verticals that I just mentioned. And then, then went into software and AI investing in a couple of funds in San Francisco, across Turn River, investment venture partners, which was great. But I think I've always been a later stage investor for a while, and it's sometimes great, but it's also sometimes terrible, because I think the data almost informs why you shouldn't believe in the asset. I know that sounds just so terrible, but at the same time, I think obviously as an investor, you spend all day proving or disproving yourself. And I think it's much easier to disprove yourself when you have all this data you can point to. And so I think I struggle to get really confident with a lot of the valuations and the ways that we're thinking about why something is worth something when I'm sitting in the data room, and I just genuinely don't believe that.
Right.
And so basically that was kind of my light bulb moment of I think I should move into earlier stage investing. Easier to, believe in things when you see no data, I guess, in some ways, right? But then also for me, after a lot of AI and software investing and spending time in a lot of these, I guess, verticals that are not disrupted by AI, I again, this is 2024, maybe right before ChatGPT and Cloud launched. I was thinking back to the work I did in my early career, the boring renaissance that is now happening, right? And I was thinking well, those are real physical assets. Sure, they depreciate over time, but it's a thing, you can touch it. And so really my thesis was okay, well, why don't I pivot, invest in early stage, and maybe invest in ideas that will turn into physical assets. And so that was kind of the theme, I suppose, that I landed on ideologically. And then I wanted to move to Europe. My whole family was living in Bulgaria. And yeah, so that was kind of my renaissance of sorts, where I was well, why don't I move to Southern Europe, see if I can build something interesting, and met some of my partners here at Novaterra, and very similar investment thesis of let's think about critical technology, let's invest in real things. I guess deep tech adjacent, but more IP and things that should exist. So yeah, that's kind of, I guess, how I landed here.
Right. And so what investments have you been part of since landing in Milan?
A few, actually, a few. I would say we've done, what is it, like 12 deals in 2 years?
12 deals in 2 years?
Yeah, in 2 years.
All across critical technologies?
All across critical technologies, yeah. I think like some notable ones I'm happy to mention is we recently backed a company that's focused on essentially creating cathode materials for LFP and LMFP batteries, since there's a huge supply-demand side shortage in the US right now, especially given the geopolitical situation of sorts. And yeah, these guys found a really cool method where they can just like melt the inputs and therefore don't need as high purity critical minerals. So it's a little bit of this play of like, okay, we don't need China to make these materials, but then also this is a highly critical input. The cathode is the most expensive part of the cell. And this is hopefully a path to solving the supply-demand side shortage. So that one's called Nascent. They're out of New Jersey, so backed that one. Here in Italy, we backed a few companies as well. Backed one called Graphicore, focused on end effectors for extreme environments, specifically starting with graphite-moderated nuclear reactors. So that one's pretty neat. Interestingly, they just posted with Sogin, the Italian nuclear body, they did a demo where they were able to successfully lift the graphite out of the reactor. So that was pretty neat. But a lot of things like this, which again, kind of like heavy industry, supply chain, sounds a little boring compared to like, I guess, AI these days, but I think equally important.
Right, and so it's across both Europe and North America?
I would say like it's an even split. I think the goal is to be a little bit more Europe-centric moving forward, but it's been a bit of an even split, and especially because a lot of our companies want to get into the European market or see an angle in the European market, and of course Europe is very generous with a lot of the grant incentives here. So I think it's always helpful for some of our North American founders to have some European exposure in some way.
Right. And so when it comes to the maturity stage of these businesses, how early are they?
Yeah, I mean, we've invested in companies that are not yet incorporated.
So just team?
So literally just team, or like idea, TRL3, basically nothing. I mean, we've also done seed rounds as well. Pre-seed seed is typically it. But I think for me personally, it's the most exciting when it's like, okay, now we incorporate your company, which doing that in Italy was like a fun experience because I've never incorporated a company in Italy before, obviously. And in the US, you like fill out a doc and you're a C Corp, right? It's not that hard. Here, it's like, okay, 6 months, we call the notary, notary's on vacation, we need to get the notary here. Like it's an entire ordeal just to incorporate a company. But it's been a really fun learning experience. And I think seeing this unfold across our European portfolio has also given me a lot of perspective on why it's maybe not so easy to do business in Europe. So yeah.
Okay, so when you're investing that early, what kind of ticket sizes are you deploying?
Again, this is another interesting question because it also depends on the geography. Of course, the geography where you're investing in, 100K can go very far in places like Italy and maybe not so far in places like San Francisco. So I would say first ticket in is typically 100,000 euro up to 500,000 euro. We'll be announcing our institutional fundraise soon, so that will be going up in the future. But so far, we've been writing pretty tiny checks.
Right, and are you typically a lead investor?
It depends. So on some of the ones where we've done, tiny pre-seeds and it's just been us, yes, because we're the only one there. And there's areas where we followed because it's a bigger round and our check size would probably not be so meaningful compared to what others are investing. But I think the dream is that typically across a portfolio of say 40 to 50, we would be leading like 10-ish.
Right, and you mentioned your new fund. Could you tell us a little bit more about that?
Yeah, it's really exciting. So, I mean, these last couple of years, we've been investing from a side vehicle, like a holding, so we can continue to build our track record and show that we're investing in some awesome companies. And luckily, it's been going quite well. And so we're going to spin off an institutional fund very soon, hopefully in the next couple of months here, with our first close upcoming. So basically the same strategy across energy, life sciences, compute, all things critical technology. Again, the check sizes may be a little bit larger, so think 100,000 euro to $1 million for the first check-in. Still early stage, still IP heavy businesses, but yeah, we're really excited to launch that soon.
Where do you think the biggest investment opportunities are in critical technologies?
Yeah, I mean, that's a beast of a question, right? I think there's so many, and I think like the only way to really like play the game correctly in a lot of the areas that we invest in is like really just mapping out the supply chains. And so for us, for instance, in energy, what we had a great time doing was like mapping out the supply chain of like, okay, well, what does it take to get fusion to happen? Well, what are the steps for all the fusion testing? What are the things that we need? Where are there gaps? Why is it difficult to do these different things? And then kind of identifying like picks and shovels in those supply chains that we see as like, this is a missing opportunity. And if this exists, then we can enable all this technology. So nuclear is just an example, but we did something similar across energy for batteries. We've been thinking about this with compute. We've been thinking about this, of course, with life sciences. It's always about like, what are the most critical supply chains? Who's doing what in them? Where are there actual like structural demand and supply side shortages? And I think for us, that's kind of the core of how can we find a monopoly or oligopoly or a player that is like so critical to a supply chain that without them, you don't have the thing that you need to make.
Right, so it's about irreplaceability.
Yeah, exactly. Or like even things that are just very difficult to substitute because there's just no supply for it.
So what's one belief you had earlier in your investment career that you now know is completely wrong?
I think, well, this is like a classic, like AI happened and everything I once thought like was a thing isn't a thing. But no, I think like for me, I don't think I've ever had like a very specific belief that I really strongly was like, yeah, this is the way. Because I think like the most interesting part of being an investor is having to hold all the nuance of sometimes this makes sense, but sometimes it doesn't, right? And finding the things where something always makes sense is very difficult. But I think like the core one for me is like when I was doing more software investing and spending a lot of time looking at sticky, mission critical software businesses, typically B2B, which now I'm laughing because I can't imagine how some of those businesses are faring right now, to be honest. But let me tell you, in like 2022, those were like the hottest businesses ever. We were looking at like gross dollar retention as like a measure of success. And I think, you know, for the longest time, I thought like GDR is really like the North Star across software investing. And I think, of course, it's important to have excellent retention metrics, and retention is still vital for the health of a software business. However, I think that the sustainability of that metric is no longer what it once was. And I think my belief then is like, if it's a high retention business, it's going to stay a high retention business. Why would you churn off in 2 years? And now that I see that Claude's like $20 a month, I'm like, yeah, I know why you would churn off in 2 years, right? But I think like before seeing new technology and new paths and how easy it is to almost create like a developer first type of sales motion for people at the enterprise. I think now when you see that, it's like, okay, I completely understand why you would churn off a 2-3 year contract with something that's department wide.
Right. And so what kind of replacement for GDR do you have today?
To be honest, I've given up on investing in software for this reason, because I don't know. I mean, I have a different thesis on where that's going. And it's like, I think that, you know, of course, the cost of compute is still quite high. So my mini thesis is like, there's going to be software that still exists because there's no reason that you should be spending egregious amounts on tokens to do something as silly as like input a deal, like an RDL CRM, right? However, I'm not really sure how you could classify best in class. And I think on our side, this is why we've been so true to this IP strategy and focusing on things that have something. I mean, it can be asset light as long as there is some kind of IP where I can still kind of point to like, well, there's value in this. And I think with software and AI, because it's so intangible for the longest time, it's been very difficult for us to get our heads around like, where can I point to the value other than in distribution?
Hey everyone, taking a quick break from today's episode. If hosting Raising Europe has taught me one thing, it's that a founder's real job is in resource management, balancing your cash, your time, and your team's focus. That's exactly why we built Frontier Stack, so your business can grow faster and spend smarter. You get access to the growth stacks that top founders across our ecosystem are already using to outpace the market, giving you preferential access to tier 1 tools and services like Airwallex' competitive FX rates, Whisperflow's productivity suite, and Velocity's incredible paid advertising engine. Stop guessing and grow faster. Head over to getfrontierstack.com right now. Join the waitlist and lock in your priority access pass so you can grow faster and spend smarter. That's getfrontierstack.com.
Right. And so when we look at the valuation of IP, what kind of frameworks do you use to determine whether it's valuable IP or not?
Yeah, well, it's really interesting because I think it depends on what the IP is on, of course. I think the core thing for me in IP is also, what are you using the IP to do, right? And so if it's like, oh, like we have an end effector or a hardware thing, cool, but like what are you using it for? And so for me, like my North Star on this has been really interesting, where I'm just like, okay, I need to find businesses with good enough IP that they're using the IP to do a process that's so like egregiously annoying for someone else to do that, like, why would you do that? Even if you had this IP, why would you do that? That's so difficult. That's just like, you have to be very passionate to be doing this. There's literally no reason that a normal person would want to do this for a business reason. And like, that's kind of how I've been thinking about some of the deals that we've done recently. Like we recently backed this company that's focused on biosynthesizing heparin. Heparin, which is like a 30+ step process. The only way to currently do it is via pig intestines.
Wow.
And they're actually all in China, the pig intestines we're currently using for heparin. Except heparin is administered to 1 in 3 hospital patients worldwide. So it's a little bit concerning that our entire supply chain is coming from a farm in China. And that's actually why we had those 2008 world shortages of heparin during the swine flu outbreak. So interestingly, this whole thesis was, why don't we biosynthesize it in a lab and then create heparin that we can have in hospital settings internationally, where we're not relying on pig intestines and the health of the pig population, right? So again, the more diligence I did on that, of course they have IP on their process and how they're synthesizing it. But once I went through what each step takes, how much tech transfer, how many CDMOs or CROs they have to go to in order to make this thing happen, I'm just sitting here like, you're doing this for a business reason? But no, I mean, it's so critical. It needs to exist. It's super important. But yeah, like the more you study it, the more you're like, I understand why people are deterred from building this. This seems like it sucks.
Right. So it's, finding almost, I think you mentioned it's not irreplaceable, but very hard to replace IP. And that's where the value is.
Yeah, exactly. And the value is also in the process. It's in the fact that, cool, we have this IP, but like now you have to do it. So who's going to source the CROs? Where are they based? Who's going to talk to the CROs? Who's going to manage the entire process? Because you can have the IP all day, but who's going to teach the CROs or the CDMOs to do it so that you can synthesize it?
And for a layman like myself who doesn't know what a CRO or a CDMO is, what does that stand for? It's
like a contract research organization or a drug discovery organization. So typically when you're doing drug discovery, you're using like drug manufacturers outsourced, and there's a bunch all over internationally, but they all have different capabilities. So some have bioreactors, for example, some have different things that they can do at different capacities and scales. So most of the time in this heparin opportunity, we noticed that there's really not that many CROs or CDMOs that can do the entire process, which now means that you need more than one, which creates significant complexity, of course. And so, I think it's like this complexity is part of what makes the IP even more valuable, because just having the IP is not enough. You need to actually execute. And if you're executing by managing so many different stakeholders across an entire process, that becomes a very different skill set than just, I figured out how to synthesize this in a lab.
Right. And so how do you find and source these, very unique IP situations, especially when, lots of VCs are going very data heavy with their sourcing processes?
Yeah.
How do you find these unique ones?
Yeah, I will say, like, when I was doing more late stage investing, I was always using like cool little search tools, finding stuff. And obviously it's a lot easier when a company's been incorporated for a few years. What I've really enjoyed about going to way earlier stage investing has been really the human component, and I guess a little bit of like the detective and hunting component of what we do, because I think like it's just so personal. Like so much of what we do is like it's a person with an idea, no company, there's nothing. And so for me, like, I mean, I feel like I've become like accidentally very competent at like the strangest approaches to finding companies. But I mean, of course, a lot of it is network, who you're friends with, what you talk about. Am I currently reading or thinking about? What's an area that I'm curious about? Go down a rabbit hole, and then I just start like keyword searching of who's building this. Like, has someone said the word heparin in the last 12 months on LinkedIn? And if so, I'm going to message all of them, right? Which is, again, a cold approach and very, I think, different than, okay, I'm going to go use a tool. And how did I even land on heparin, right? It was just my own personal interest because of a deep dive I did on blood clots. So, and another fun example of this is like, I read a lot and I really enjoy like going on different sites, a lot of like Substacks. But I was recently reading the comments under Brian Johnson's post, which is one of my favorite hobbies. I really like to see what he comes up with and then to see who in the comments is like calling him out for something. And so recently, I noticed this woman who has been explaining to him in great detail under his posts on LinkedIn why his study of n=1 is not actually applicable to the general population and what's flawed about the study. What does this look like at a population scale versus an n=1 scale? And so I messaged her I just out of nowhere, where I was like, I love the charity work you're doing under Brian's post. This is great. But then I also noticed she was a founder. And so I told her I'd love to hear about what you're building. And she agreed, and we had an hour-long conversation. She's never raised a single buck. She's already built her platform, really interesting business. And now we're in diligence with the company. And again, this is another one of those like crazy little like personal human moments where I don't think that like a random tool would have helped me find her or have this kind of, I guess, founder connection with her. I just thought that way of meeting a founder, let alone just connecting with another person, is just like a little bit of serendipity and what it is we do as investors. And I think when you lose the human side of it, that's like a moment that, I don't know, I think like that's the core of early stage. It's really what is the type of relationship you have with these teams. How can you help them grow this idea into something? And I don't think for 1 minute that, you know, I'm super qualified to be doing that. But I think what's been really fun is when you build that type of relationship with someone and they actually want your take or your ideas, and you can create something together. And it's not necessarily off the basis of, oh, you have so many qualifications that you've grown businesses before, but it's more so on the basis of, well, I trust your judgment as a person. So how would you think about this? Which again, I guess is a little bit more of that serendipity point.
Right. So when you do find these amazing founders, you know, how do you identify a must-back founder?
Yeah. Oh, tough. I don't know, honestly. Gut feeling.
Gut feel?
Yeah, a little bit. Okay. I mean, it has to like pass my core things, which is like, does it exist? Yes or no? Typically, if the answer is yes, probably won't look at it, right? But if it exists, but is it like substitutable? All these things, like the market needs to make sense. This is like the classic VC question, like team, product, market. All of them need to check out. However, because we back at the idea stage, and this is specifically for my pre-seed founders, I think seed's a little bit later, but I mean, how many pre-seed founders have actually stuck with the exact idea that they pitched at pre-seed? Like, I have a feeling that number is not that high. And so what you're ultimately backing at that stage is their ability to execute on a vision. Doesn't necessarily need to be this exact vision, but it needs to be that they can execute on a vision, and the vision has to be in a market that, or product adjacency that you think makes sense. And so for me, I think what's been like the must-back founders are folks that can explain exactly how they want to execute or exactly what their vision is. And again, even if that changes, that's fine. But I think just having the foresight and the thinking of this is how it'll go. And when you ask, what's the first thing that breaks? Actually having a question or an answer for that, and having like a path to what you would do if it completely fails. Whereas I think in the past, like we've seen a lot of situations where like when you ask someone what breaks or what happens if, you know, this doesn't work, they're like, well, then it fails. It's like, okay, then what? Right? So I think identifying, I guess, a little bit of the creative thinking.
So, you know, early stage founders are often great storytellers. how do you distinguish between storytelling skill and real substance?
Yeah, great question. I think, well, it's also interesting when you invest in different geographies because you see a huge gap between storytelling with some of our North American founders versus some of our European founders. And it's been really interesting because out of the, I'm going to guess maybe 2,000 to 3,000 conversations I've had in the last 4 months, something that I consistently notice is that in North America, the level of storytelling relative to what's been accomplished is absolutely shocking. And then somehow in Europe, you'll talk to some of these founders that have accomplished a ton, and they're like, yeah, I don't know if I'll ever get a customer. I don't think anyone would ever pay for this. And so it's been really interesting because I feel like I'm doing reverse detective work where if someone's storytelling is very good, I can assume they haven't done that much. And if someone's storytelling is just abysmal, I have to figure out like why they're such a poor storyteller relative to what I'm reading, which is what they've accomplished. So it's been a really interesting, I think, coming from the US to Europe and noticing this trend in how founders present themselves, especially in deep tech, which I understand if you're a scientist and of course having to question yourself, having to question everything. It's just super funny to me because it's like I almost trust you more if you're sitting here and you're like, yeah, I don't think I'm ever going to get a customer. I don't know. But at the same time, I'm also like, how are you going to raise the next round? We got to work on this.
So do you think maybe a mid-Atlantic approach is required, a little bit less storytelling for our US, North American counterparts, a little bit more from Europe?
Exactly. And I think this is true too in a lot of the North American founders that I meet where it's like, I love the story. It's just that what's currently accomplished doesn't exist yet. So I think even just breaking that up a little bit with here's what we have today and here's the long-term vision versus we're going to automate everything in the lab. Excellent. What does that mean? Right. So I think, some kind of mid-Atlantic approach. Maybe we combine both. And I do think this is a common thing with founders. They don't really like to brag about themselves, especially scientist founders. It's okay to brag if you've accomplished something. It's so interesting that I think the psychology of it and the types of people that we meet in venture where it's like they're physically uncomfortable to tell you that they're at tier 8 or something. You should be so proud of yourself. That's excellent.
So what pieces of advice would you give to these European critical technology founders who just don't have the same level of storytelling that they probably should have, especially given the achievements they have to date?
Yeah. I think you have to find frameworks that work for you. And I think if you're a scientist, your framework is different than someone who's in finance, someone who's in fashion and literature, whatever. So I think the whole point here is okay, you don't need to be perfect in PR. You don't need to be the best storyteller, but it's okay to explain what you've done in a layman's terms completely normally and not be too afraid that maybe you've accomplished something that is, I don't know, seed stage, but you're a pre-seed company. So I think just very being upfront, saying what you've accomplished, what you've done, without necessarily having to turn it into, well, my long-term vision is this, right? It doesn't need to be rehearsed. It doesn't need to be how you think storytelling should be. But I think it's still very important that you mention those critical milestones that you've achieved, especially for investors.
And then for, you mentioned some of them are concerned about getting their first customer.
Yeah.
For those. Yeah.
Whenever I see that, it's funny because on one side it's charming and it makes me want to back them more. And on the other side, I'm also I'm going to need to have a 5-hour boot camp in my office with you to tell you what you're allowed to say to people. But I don't know. I think in some way, that gives them the charm of, oh, this is someone who's a human and questions themselves, which is really important. You need to be questioning yourself. You shouldn't be sticking to something if you see that it's not working. But at the same time, maybe instead of a negative line of questioning, we can use a positive one when we're pitching to investors.
So when you think about founder traits, what founder traits are overrated?
Overrated. Storytelling.
Storytelling?
I think it can be learned. I really do.
Yeah.
And I think if you get a great marketing intern, even that could just change your deck and situation. Yeah, I don't think that storytelling is nearly as important as doing the thing, specifically in deep tech, right? Yeah. I also think another one is just okay, I think grit is very important and resilience is very important. But I think that there's like this weird, like hustle, grindy mindset that has become a little bit too overrated, in my opinion, of this thing of like, well, I'm going to work until 5 a.m. and nobody's going to go on vacation and there's unlimited PTO, which means no one takes PTO. For me, like that is like, that can't take you that far, because physiologically speaking, there's no reason that you can continue this for more than 18 months, which is coincidentally when your runway expires. So I think, for me, it's one of these things where I think a sustainable approach to how you divide your work, how you plan your work, how you think about resourcing, that's super important. And I think that there's just all these like annoying buzzwords of like, oh, you need to grind hard. I think it's okay to go home sometimes.
Yeah, and then also, pushing hard in the right areas is important.
Exactly.
You're hearing in the market about people who are sleeping in the office, and hustle culture is going wild. So yeah, I completely agree.
Yeah.
That's probably one which should probably calm down a little bit.
Yeah, maybe we can push smart instead of hard.
Exactly. How does early stage investing in Italy differ to investing in other countries?
Oh, it's very different. I think it's culturally, Italy is very different than I think a lot of European countries, let alone from the US. And so I think one of the core differences is like culturally, like the way that people see work and labor is a little bit different. I think there is less of the like push harder, go home mentality for sure. But at the same time, I think there is a bit more of a sustainable approach to how people think about work. I will say the hardest part is probably like what we're talking about with that pre-seed company that we helped incorporate, which is that in Italy and I'm sure in other places in Europe, it takes a while to do a lot of the really fun, like legal and bureaucratic frameworks that come with how do you incorporate a company? How do you get a customer? Getting like an LOI signed is a bit of a different beast in countries like Italy than getting an LOI signed with US companies. Like it's so funny when I see some of my North American companies that can have one conversation, sign an LOI off of that, and they're like, oh, it's non-binding, who cares, right?
Yeah.
And then you talk to some of your Italian companies and they're like, yeah, it's non-binding, but they need 12 months to sign it. So I think it's
Wow.
And of course depends of course on the sector, but I think the bureaucracy and a bit of this I guess skeptical approach when it comes to early stage. And I don't blame Italy or Europe for having a skeptical approach to early stage investing. I think, of course, it's a very risky asset class and you want to be in a position where you've done as much diligence as you can. But because it's early stage, you're not in a position where you can do any diligence at all. So it's one of those situations where maybe US companies should take like an additional day to like read the deck, and maybe Italian companies can realize that you'll never get any certainty that the company won't fail because it's pre-seed.
And what are the great things that, the people and stakeholders in Italy are doing to support the ecosystem here?
Yeah, I mean, of course, we've got the Italian pension fund, CDP, that's been investing a lot in different funds and in companies and really helping create an ecosystem here, which is excellent. I think a lot of the universities have awesome talent. We have some great relationships with Politecnico di Milano, di Torino, a lot of these technical universities that have these TTO offices and IP and access to excellent PhDs. The technical talent in Italy is very, very high. So I think it's been great to see that there's been more opportunities for people to create like a startup and turn their postdoc work into something. And of course, the pension fund investing both in early stage companies and funds really helps create like a capital ecosystem for that. And then I will say like on some of the bigger companies, what I've been very pleasantly surprised on is like in some of my early stage companies, like with the one that I mentioned, the pre-seed one, like they literally have a signed, LOI with the Italian nuclear regulatory body. They did a demo together. And like that is just so crazy to me that, pre-seed company can do that. The founder has a texting relationship with the CEO of that. Meanwhile, like you can't exactly send a tweet to Elon in America and expect Tesla to be your first cathode customer, right? I wish it was that easy, right? But I think there's a little bit more accessibility to large companies and potential customers and potentially, working with some of these companies and co-development projects. I think there's a lot more accessibility, at least in Italy, with what I've seen with some of our portfolio.
They're really doing great things here in the ecosystem, and it's only up from here. In hindsight, what's one business that you wished you'd invested in, but you didn't at the time?
There's one that I really believed in that I was very excited about. And I think at the time we couldn't invest mostly because I think she was closing the round in the week. And
Too late.
I was too late. I wish I could do diligence in a week and get that done, but unfortunately it was not possible. But it's a company called Sapphire Neuroscience. It's really interesting. This woman, she is a neuroscientist, and she basically created this like wearable headband of sorts, which also works as a neuromodulation device that helps with period cramps and mood swings during menstruation. And she had some excellent traction. I mean, the thing sold out in 24 hours the second she put it on her website. And
wow.
Yeah, it was one of these things where I'm like, this is so cool. I really like the research behind it. This needs to exist. Like, I want to buy one, but I can't because it's sold out. But again, unfortunately, like with 5 days left to close the round, there was just no way for us to get in.
And when it comes to the companies that you have backed, how do you like to work with your portfolio companies, and how do you add value than just providing capital?
Yeah, great question. Honestly, I think given that we've done more following than leading, it's been a little bit of like choose your own adventure of how involved you want us to be. I felt very fortunate that a lot of my founders have wanted to be quite involved with me and will have calls with me and ask me about how to pitch, how to storytell, how to think about things. And I think one of the most useful things is probably because I did do later stage investing, kind of helping them think about how to raise the next round, what it should look like, how it should be valued, what investors at that stage would want to hear, right? So a little bit of that. And then on the other side, with some of the ones that we have led, are really early Italian ones, it's been really fun because I basically feel like I have become like the sales manager that nobody asked. So it's been fun where we'll just have these sessions where it's like, okay, obviously these are scientific technical founders. They have never sold anything before. They just finished their PhD in nuclear engineering. So for me, it's been really fun to just sit here on the whiteboard and say, all right, so you're now demoted from your great brains and your PhDs in nuclear, and you're now sales development representatives. You're going to spend all day messaging all these people that need end effectors for high temp environments, and we're going to get through this together. We're going to work through the messaging. We're going to figure out like who the best people to reach out to are. And it's been really fun, like giving them these types of frameworks of things that I've seen later stage companies have to do in order to acquire customers, and then bringing that forward to some of my portfolio. Which I mean, hopefully has been valuable and not as much of a headache for them. But so far they're having great results. So I'm going to think of myself as partially culpable for that outcome.
What advice would you give to investors?
I think one of the core ones, not even European investors, maybe just all investors, is like, I think it's just better to pass on an opportunity that you know you're going to pass on the call, rather than not tell them and then never respond to their emails. So then you get a full inbox and they get ghosted. And listen, I'm also guilty about doing this. I think all of us do this all the time because we talk to so many companies and we can't possibly talk to all of them. If you know it's a no, give them the soft no, move on. There's no need that someone needs to be sending you, 30, 40 emails trying to figure out if you're interested.
Outside of being a VC, who is Lina Gaydarova?
Yeah, good question. Outside of being a VC, I think I'm just a generally very curious person. So I just do a lot of reading, a lot of thinking. I spend a lot of time with my equally curious friends. We always joke that our favorite hobby is to just aimlessly wander and psychoanalyze things, which is basically like all we do. A lot of working out. I'm a big fan of weightlifting. I've recently been doing a lot of weightlifting and macro tracking and protein maxing and all of that.
Protein maxing.
Oh yeah, we're calling it protein maxing now. Yeah, but yeah, so a lot of that. And then I think for me, I've always been like, I would say pretty creative. So I like to sing. I like to play piano. I like to draw, style myself. Some would say I have too many clothes. I disagree. But yeah, I would say those are probably the things I do most often. And then again, on creativity, I've been really into cooking cooking. So I combine creativity, cooking, and protein maxing to try to create recipes of things that don't taste terrible, which I would say I have like a 65% hit rate on that for now. But maybe someday that percentage will be better.
If you weren't a VC, what would you be?
Good question. I would have probably liked to be a plastic surgeon.
What's your favorite book?
It's called Like Water for Chocolate. Yeah, it's a book I actually read in like a literature class a really long time ago. But the entire thing is about like magical realism. So the entire book is written in this like very dramatic way, where essentially the reason why it's called Like Water for Chocolate is because her tears of losing her lover were like water for chocolate, because
Wow.
you can't have water in order to make chocolate.
What are your favorite podcasts?
I listen to a lot of different like fitness podcasts. So I've been listening to a lot of Dr. Stacey Sims, and she does a lot on physiology, specifically physiology for women. And so it's been really interesting because she brings up a lot of good points about how most of the studies that have been done in the last 20, 30 years that have to do with exercise science have been done on men. So it's been really illuminating for me in my fitness journey. And then another one that I've been really enjoying is like I listen to a lot of this podcast called You're Wrong About, where they just like debunk random things that you've probably heard about, but like you've never really understood the story of it. And so it's really interesting because it's one of these things that gives you perspective on things that you just don't think about. So like they'll be like, you're wrong about QAnon. They talk about this entire like conspiracy theory, the Pizzagate, all this crazy stuff. And you just go down these really fun 60-minute rabbit holes about random topics.
What's your favorite film?
Inception. Yeah, for me, I really like the idea of like architecting a different world.
Well, Lina, it's been great having you on the show today. Thank you very much for coming in, and wishing you all the best in the future.
Thank you for having me.
That's a wrap for today's episode of Raising Europe. Thank you so much for tuning in. And as always, remember, your biggest edge as a founder comes down to resource management. If you want to stop guessing, head on over to getfrontierstack.com right now and join the waitlist. Lock in your priority pass now so you can grow faster and spend smarter. If you've enjoyed today's episode, be sure to subscribe, hit the like button, and share this episode with a fellow founder who's building right now. Until next week, keep building, and we'll see you soon.